All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and today is Friday, May 17th. So, this is your end of day and end of week, which I try to summarize the week's activity once we get to Friday. We had a kind of a nasty day today, right, which is unusual for what we've been seeing for Fridays in 2019. Fridays have been exceptional. So we were probably due for some, choppy price action. There was some headlines again at the end of the day that kind of picked things up to the downside. It seemed like we were a bit vulnerable all day today. So, yeah, kind of a nasty little end to the day with. You can see that big red candle. What I'm looking at is the 1 hour value area. I thought this was again very precise. How we're using the value areas last week. I'm not going to rehash that, but we talked about three different levels in the S&P that needed to be taken out on the downside. 28.22, 28.17, as well as 28.10. Those were all taken out, and really, then it became for the week looking at the for the 1 hour, and this was the last one that was taken out. This virgin point of control, but it was, can we get into value? So we did get into value. We had a really nice Thursday, obviously with price action, but it seems like we're getting some pretty decent overnight moves, and there's the volatility seems to be picking up in the overnight moves. Now, overall, maybe the volatility, beginning of day, end of day is not that big of a story, but just a little bit different price action that we are getting these sell-offs in the morning. So what does that tell me, right? That we're getting these moves overnight. It kind of tells me that, and it's going to be a little bit of the theme of this video, is I'm kind of coming to more and more to the conclusion that to be a little bit lighter in positioning, right? And certainly we did that yesterday. We took off a lot of positions. I added two positions yesterday, and one of them got stopped out today. So um, that stunk, right? I wasn't expecting that to happen, but it is what it is. You have stops in place for reasons. It broke. This was ZBRA, which broke my stop level. So unfortunately, putting something on yesterday into strength did not work out. But again, I always go through, exactly what I'm doing in the trading room. So let me get to. I'll talk about. I was pretty quiet today on Twitter. Just kind of watching the price action, trying not to get uh, overly aggressive and sitting on my hands when I think that there was uh, when there's a lot of chop on the market. I did think that we were going to have a nice little day in terms of in terms of price action, because we did open up weak, and the trend has been this week is that we come back and we kind of rebound. We just didn't have the momentum to do that today, but yeah, I mean, a couple names, and the names that were really strong yesterday, they cooled off a little bit today. They took a breather, which I think is perfectly normal. A lot of inside days there. I want to go ahead and so here's what I was saying at the. I'm going to jump back and forth. Sorry, it is Friday, and I'm actually I'm a bit tired from the price action this week, but. Besides obviously checking things for May option expiration, which was today, I said light trading for me today. I see a lot of chop out there. So this was actually before we started to kind of take that leg down with the headlines. I said I'm trying to slim down option positions. I see more areas breaking down. I'm going to go over some of those charts. Definitely China sensitive stuff, but I'm going to talk a little bit about the emerging markets here, and I'll bring up the performance in just a second. And here's some of the charts. So, and then in conclusion, which I'll get to my conclusion a little bit later, but you could read it right here. But let me recap the performance, because, let me just tell you a little bit about my philosophy. If you are either a newer member to Tribeca Trade Group, or if you are just watching my video for one of the first times, end of day video. But I'm very much. I tried to watch price action. I think price action trumps everything else. I think that the information that you get in price is leading, and So besides with the noise, with the headlines that we're constantly getting on trade, right? Everything is going to show up in the. I'm a firm believer that everything shows up in the price, and if you follow the trend rather than the headlines and the noise, I think that's a better way to go. But you have to be able to, if you're doing that, right? And my goal is to be as objective as possible, meaning not being a perma bull, not being a perma bear. Of course, I'm going to always lean to the long side because over time markets go up over time. But at certain times, I do think it's prudent to have hedges in place or to just position a little bit lighter. So that said, the reason why I'm bringing that up is because I see some things that are a little bit different. If you remember a couple weeks ago, one of the things that I said was, and this was right around. It's funny because sometimes you say these things and then the facts change very quickly. But I think I said this in April. I said, hey, what we're seeing so far as of April was that market breadth has been global market breadth had been very strong. Emerging markets were going up, international developed markets were going up, and of course, U.S. markets were going up. So what's happened in about 2 or 3 weeks? There's been a lot of things breaking down. So let's go right to the performance, and then I'll go to the charts. But you could see I have up here. So this is our newsletter. And what I do is I start to kind of just fill in the newsletter for the weekend. We'll have a lot of good things to talk about in the newsletter this weekend. But this was the previous week's performance. This was one of the biggest down weeks last week. Not this week, but last week. This week, we had continuation of that. So SPY finished down close to 1%. The diamonds finished down also 1%. Small caps, which I think are really not telling. So this is one of the signs that I think is important to pay attention to is small caps now down about almost 5%. That's 4.9% in 2 weeks. The Qs were also down 1%, very similar to SPY and diamonds. And then if you look at emerging markets down 9% in 2 weeks. That to me is startling, and that has to change for me to remain really bullish about this market. Bonds for the second week in a row up about 1%. And gold, who knows what gold is doing? Down 7. I just can't figure out gold these days. So we'll move on from that. If I can't figure it out, I don't spend a lot of attention on it. But gold reversing the previous weeks. Listen, you got to laugh at something. You're not going to you're not going to be able to figure out everything. So this again was the 2 weeks ago performance, and I've updated this for this week's performance, and it kind of feels a little bit similar. So what was the better performing sectors a week ago? Oil and gas, gold miners. You have consumer staples, utilities up there, and then look at what this week did. Gold miners finished up 2.2%. Utilities finished up 1.5%. REITs, consumer staples, again, for the second week, a very defensive looking tape. Home builders look pretty good and I think that's being helped a bit by not only what's going on in interest rates, but it seems like people are buying more. We had some economics that came out this week that said new home sales were up. Also, home builder sentiment was also a tick higher as well. So pretty interesting there. It looks like people are actually taking advantage of the lower rates that you get on longer term rates, right? Software names were actually flat for the week, even though they had a couple really good days. So if we flip to the negative side, for the second week in a row, China internets were down 7.6% 2 weeks ago. This week they were down another 5.2%. We had a lot of earnings in the group that didn't help. Baidu got completely slammed today. A bunch of other names. Hua I think was down. TME was down. Baba initial reaction was higher, but then ended up going lower. I believe for the day. I wasn't watching that one completely. I think one of the best names in the group has been JD.com. But anyway, that's 12% in 2 weeks. The semiconductors also got hit pretty hard, right? They are trade sensitive, right? A lot of components. There's a lot of sales that semiconductor companies do to China. Metals and mining down 4.3%. So again, a lot of trade related stuff. Also the banks for a second week. I think the banks were down. Where were the banks last week? I guess they weren't on the worst list last week. but down 3.5% this week. Retail also down. Then it gets even more interesting here when you look at international. Besides, I've got the K-Web up here, which goes. I have it listed as kind of in my sector list, even though you could probably stick it in the in. You could stick it in the international area, but Russia and Vietnam outperformed. Not a lot of great things going on in international, and so this is where I think it's really interesting. It's in emerging markets. It's not just China going down, right? We were talking about this kind of in the room at the end of the day and saying, okay, well, this company, they might be down because of China and so forth. But look at Brazil, was down 8% this week. It's not something that I've been really paying attention to. Whoops. Or, I haven't been trading Brazil, say it that way. Um, yeah, I mean, this looks like it has broken down. There is some support in the EWZ, but uh, you know, pretty decent moves down here, and a few other groups. Right, Indonesia was down 8%. Taiwan was down 5.5%. South Africa was down 5.3%. So again, this is really not what I want to see here. That these areas going down. So let's dig a little bit deeper. That's the performance. I want to look at some relationships. Just to see what's going on under the hood. So again, the reason why I don't really wanted to, I hate coming out with negatives on a Friday because it's the weekend and we want to be happy going into the weekend. But it is what it is, right? I would rather give you this information so that you can make adjustments to what you're doing. But this is emerging markets versus U.S. markets, so EEM in the numerator, SPY in the denominator, and it looks like we're getting some type of a repeat of what we saw last year, which again does not really give me a warm and fuzzy feeling that emerging markets are breaking down pretty hard here. So again, big portion of China in there, but as I just went over with some of those country-specific ETFs, some of the countries that are going down are doing worse than what China is doing. So like Brazil, which is also in this EEM ETF. But we're getting very close to that that's October low. And this started to go down. If I go back a little bit further, but this started to decline basically in March. Notice this has kind of been trailing and really picked up to the downside in April. And then obviously in May, you've got a big move down here. So I think that is somewhat telling. And then I've got another important chart to look at, which I think is going back to this IWM SPY chart. And we're back to the low. I mean, this is back to the December lows. So again, this is not what I want to be seeing for my risk appetite to be high. This tells me my risk appetite wants to be low. So again, going back to some of the things that I sent out, I try to practice what I preach. Like if I'm feeling that my risk appetite should be low because global market breadth is deteriorating, that means I want to take less risk, and that's kind of what I was saying here with a couple hours to the close. Bottom line. So in conclusion, reducing some risk going into the weekend. And so let's go ahead. So now that we looked at some relationship charts, I did bring up EWZ. And I talked a little bit about this yesterday in yesterday's video, that I didn't like what was going on with emerging markets. They did not rally at all yesterday. So they moved down. They actually took out that low from the beginning of the month. So yeah, and now below this virgin point of control, which again, this can happen. We did get a little bit of a bounce, but we're back under that. IWM, right, which is also not completely over with to the downside. There is some support here, but it's definitely leaning the wrong way. And then if we start to look at some sectors, right? Let's go through sectors really quick, right? We'll start with some of these worst ones. XME, which this is metals and mining. So you have some gold miners in here. You have some steel names, right? Steel names are getting walloped right now. This is the SLX ETF. Actually, not that bad. Not that bad, but not great. So that's steel. Also material names, you know, not outperforming. So what is doing well? I would say, I showed the relationship. I mean, look at what's going on here. This is low volatility, and again, I showed the relationship yesterday between low volatility and high beta. But you know, it seems like people are running for cover a little bit in some of these areas that are safety plays. Again, part of this is because TLT is going up, right? When TLT goes up, rates go down, people want higher dividend yielding names. Like DVY is one ETF that's high dividends. Actually, it doesn't look that great. VIG is another one. So these don't look as good as when you look at the chart specifics. Insurers are looking pretty good. KIE. We talked about one name, like names like Costco. We start to look at some individual names. Are still looking pretty good. What did General Mills do? General Mills made a 52-week high, I think, the other day. But if we look at consumer staples, so a lot of these defensives are looking strong, and more material names, more trade sensitive areas. SMH uh, tried to rally very hard this morning, and you could see gave it all back. So not the best candle for there. If we look at, I do have a nice chart to show you as well from a relationship, another relationship one. Computer hardware versus computer software, and let's see if I can get this to come up. Let's see, what did I call this one? Do you remember what I called it? I may not be able to find it. Oh, here it is. It's the last software versus hardware. And look at, so again, another telling chart. Software is breaking out to new highs, and XTH, if you're not familiar, it's not, this that ETF does not get a lot of volume, but XTH is basically tech hardware. So big difference between tech hardware and tech software. Tech hardware, I view, is going to be more sensitive to what is going on overseas, what trade war and so forth. So really interesting relationship. All right, so we covered a lot of bases there. We talked about performance. We talked a little bit about taking the new information, taking this information, and how am I playing it. I have a portfolio of both options in stock. So what I try to do when I say reducing risk, what am I reducing? I'm reducing option positions, right? They're the most sensitive, especially short-term option positions. And then lastly, of course, I'm always watching my stop prices, which I will always give when I put on a trade in, especially in stock, right? So I will always monitor that, but with the stocks. But it's harder to have those stop prices in options. But those will be the first. Those are the first positions to go. So I did a lot of scaling back there. What else to kind of talk about? So I do think there are going to be, as we've been talking about, with the software rally and so forth, hiding places. So I do think this group is still very good. But I would, mainly inside days for some of these names. So I'll bring you through up to speed with. I took my Coupa software trade off inside week. I day traded a little bit of Twilio this morning because it was down. I'm sorry, not inside week, inside day. But I think here's where the strength is. MDB, inside day as well. So all inside days, right? So just kind of tells you a little bit of digestion after a big move. So this will be a place, I think to gravitate to again. You do have to be a little bit careful. I was talking to a member about this earlier in the week, is because I don't want to have 10 positions on. So you kind of have to be a little bit picky and choosy, because from time to time they do get rotated out of. So you just have to be mindful of that and kind of pick a couple of them. And necessarily I don't want to own 10 of them right now. Also Microsoft, another name today, kind of gave back, but still inside day. I thought Amazon was interesting today. I always like to buy Amazon into weakness. May need a little bit more weakness for me to. I actually put a trade on. I took a target in it and just took it off. And I think that's better to do when you're getting some bad, a little bit of bad signs. So that's it for today's video. It's right around 20 minutes, which I think is fine. But stay tuned for the weekend newsletter. I've really, as I mentioned in yesterday's video, just really happy at the work that when you put in the work and it works really well. And I think the majority of setups, my number one setup was and you could see, right, CME. PayPal was my number one setup, which worked extremely well. Workday, Twilio. So over and over, some of these names that we put out. I don't think Edwards did anything this week. Same thing with GBT. And then, of course, PGR. I think PGR looked pretty good this week, although I did not put that trade on. Yeah, I mean, so you can't put every one of these trades on, but I look forward to doing the analysis and finding names that you could possibly look at for next week's trading week. Guys, thanks very much for watching. Have a great weekend, and I hope to see you as a member of Tribeca Trade Group. You can visit us at tribecatradegroup.com. Have a great weekend, everybody.